We've got Scott Bauer, the CEO of Prosper Trading Academy, joining us this morning. Scott, welcome. Nothing at the bottom of the hour for us to break down in terms of economic data, but a busy week as far as manufacturing numbers, Fed speakers, and certainly looks like a lot of attention is going to be directed towards the non-farm payrolls data on Friday, in addition to some of the other employment figures due out.
Absolutely. That's really the focus of the week, to see if the numbers that we got last month were a one-off or if there's some sort of continuation of that downward trend. But you know what, Ben, there's a lot of economic news coming out of other parts of the world, coming out of Europe, coming out of Australia. And it's pretty significant also what we're seeing, because, you know, we're seeing inflation pressures pretty much everywhere. The rest of the world seems to maybe be catching up to the U.S. right now. They weren't on as accelerated of a path as we are right now. But it certainly is you know, front and center pretty much everywhere we're looking.
Yeah, we were just talking about some of those inflation pressures in terms of, well, at the top of the show, we looked at them as far as what we've seen in Europe, out of Germany, and ultimately with the focus on crude into these two-year highs, there's going to be a lot of attention directed towards that as well. Scott, one of the contributing factors to the run-up we've seen in commodities feeding into that inflation narrative, and yes, we'll get some more information in terms of the jobs report on Friday with the wage component, but a big factor associated to this run-up in commodities has been a weaker dollar. It's been coming off a little bit. We were talking about the influence it's had on the move up and through 1900 in gold, but certainly a contributing factor for the move in crude oil. Copper as well benefiting from a weaker dollar. Can you talk to us about what's playing out? It was a sharp move lower off of Friday's highs and ultimately a volatile session last week. I think some of this ultimately can be tied to lawmakers, some of the stimulus, and ultimately concerns related to the Fed and expectations as they've dialed back some of those thoughts that we're going to see higher rates to come.
Yeah, that's really what it is, the expectations and dialing back, you know, some of those expectations. But yeah, dipping below 90, I mean, that's a significant move. And you know, we've had this conversation multiple times here. That 90 number not only was a psychological number, but that was some big support here, Ben. So the dollar looks like it's headed down, probably back towards 88-ish or so. Again, is it a matter that the dollar is weak, or is it a matter of we're seeing these other currencies just a bit stronger now on their recoveries, which are delayed from our recovery here? So I think it's a combination. I think it's this kind of perfect storm that we're seeing all across the world here. But nonetheless here, yeah, central bankers here, the dialing back of you know, any sort of rate rise here, absolutely putting pressure on the dollar.
Let's take a look at a couple of those currencies. Scott just mentioned they have firmed up some. We've got the euro here. We can take a look at the move higher through 122. Now, a little bit of a chop as it's trying to determine the next step here. Ultimately, you've got the mid 123 handle to contend with should we continue to see bid. I've also been watching the Canadian dollar. This is going to be key to watch here, especially with that crude oil move higher. Let me just show you why. Oftentimes we talk about how, well, crude and the Canadian track each other very closely. We were mentioning the crude breakout here this morning. Scott, we're also watching currencies like the 6A, the 6N. I mean, we had the RBA left rates unchanged, but there's some talk about how they could tweak their purchases next month. And we recently, the BOC tweaking their asset purchases helped give the Canadian dollar a lift. But ultimately, we're looking at some of the other foreign currencies, especially those currencies very closely tied to the discussion we were just having a minute ago with Gary in terms of the Asian markets, the 6N, the 6A. Those have been bid as well.
No doubt about it. And you know, the Aussie dollar, even though maybe they're talking about pulling back a little bit here, that's probably been one of the firmest that we have seen. But don't forget also about the British pound. The pound sterling is the highest it's been now in, I think, three and a half years or so. And again, I look at that and say that's a delayed response to the reopening that we're seeing now all through Europe here, which is probably why the euro is pushing a little as well. The reopening, they're finally getting back on track. You know, they're lagging the U.S. here by probably a few months, but you know, the British pound 3-year high here, so that is really, really accelerating. So again, we're seeing this common theme basically all throughout the world of how to combat this inflationary pressure that we're having, how are central bankers going to react? How are they going to maybe start reining in a little bit? And the RBA, like you said, they may be the first ones anywhere to start pulling back a little bit.
All right, a lot of focus on jobs and ultimately a lot of focus on rates here, Scott, as well. I mean, they seem to be in this kind of comfort zone right now. And while there has been some concern associated with inflation, at least investors, traders haven't had to contend with rates on the rise as well. This seems to be at least providing that backdrop where we can lean against right now. The Fed's transparency has helped keep them kind of in this range. I guess I'm wondering if that would be the next real major concern if we were to start to see a breakout to the upside, because in theory, with crude on the rise higher, ultimately one could argue that it's not long behind that we see the TNX join.
Right. Yeah, you would think that if crude keeps on this path higher here, we would see TNX 170 or higher, but it's not. And that, like you said, that's really based on the backdrop of the Fed just standing pat, standing firm on their stance that we're not doing anything right now. Maybe that changes if we get another bad number here at the end of the week. We'll see. This number, though, the jobs number at the end of the week, I think is going to be one of the most important ones that we've seen probably in the last 6 months or so, only because last month was so bad. So people are going to be closely watching and, again, saying, was that a one-off last month? Are things really slowing down that much? Or was it, are we back to having a robust number, and then the Fed really has to be concerned now about dialing back sooner rather than later?
Not just the numbers in terms of non-farm payroll, Scott, especially after last month's disappointment, but also the wage component as well. We've been hearing a lot about companies, employers that have been having to offer more, so to say, to get workers back into the office and ultimately return to normalcy.
No doubt about it. I mean, we hear about it all the time. I mean, it's the top news headline that employers can't get employees back, and they have to the wage pressures to the upside, incentives, this, that, and the other. So we're going to get all of that data here. And I think that is very real. I think what we hear is not just headline. It is very real. All around, anywhere that I go, anywhere, friends of mine that own businesses, I hear it every single day. So that's going to be a key component of what we hear on Friday as well.
Scott, Bitcoin hanging out right around 35,000 to begin the week, well off that 65,000 spike that we saw, the all-time highs. What are you looking at in terms of crypto? There's been an enormous amount of focus about some of the regulatory concerns.
Sure. News over the weekend about India not banning crypto, and now the focus is what is the U.S. going to do here? And I think that's what's keeping a lid on prices. That's what's keeping some serious pressure on prices right here. If Bitcoin does remain 33 and higher, the longer it builds that base, Ben, the better off that is for the bulls here. It seems like the last 3-4 weekends, there's been a run, there's been an attempt to try and, get that price down below 33, maybe even down below 30. The longer it can put in those lows with high volume, like we actually did see over the weekend here, the better that is for the long run.
All right, gives us something to watch here. And Scott, appreciate you joining us, sharing part of your Tuesday morning with us to help us take a look at what's playing out here in terms of the currencies, as far as treasuries, and a look ahead at the week to come, in addition to a discussion in terms of crypto. We're going to let Scott get out of here. Scott's the CEO of Prosper Trading Academy at, CEO, I should say, at Prosper Trading Academy, but